Welcome to another Major Market Movements End of the Week Market Review for July 31st, 2015. I'm Quad G. In this video, we're covering the FX markets, the equity markets, and some energy markets. And starting off with the US dollar here, had a kind of a crazy day today with over the last few days, we've had this three-wave move to the downside with an A running flat, B, C, and then my expectation was that we were going to see some kind of impulsive move to the upside possibly, and that was broken today with only confirming that there was only a three-wave move up with an ABC up, and now we've got this rather odd structure here, a quick down and then it pulled right back up for basically a hammer candle for the day. So just really odd movements. I don't know just not sure what to make of it right now. I do think that this low right now, right here at about 96.20, 96.30, is probably a key point of support that could allow for a breakdown point from that level. But while it's above it, I still think you could see this market eke out another maybe possible intraday high, or not an intraday high, but a incremental high. So yeah, it's kind of a neutral spot right now. Just very odd movements. Not quite sure what to make of it. The QG3 probably would have moved into a neutral alignment today, but because the price recovered, we're still in a bullish alignment to the upside after making a very large move underneath the 20 DMA, which suggests that the 20 DMA may be becoming soft as a point of support. The weekly doesn't quite close above last week's negative close. So I would have to say this is a neutral candle, not particularly bullish or bearish. And the EWO, nothing to see there really. RSI, we're back in this squishy 40 to 60 level. Really nothing to show you there either for neutral. And the weekly MACD is still open to the downside, bearish, and the daily is ticked over to a slight bearish alignment as well, so that's bearish. So still some weakness here in this market. I'm not quite sure if it's topped out yet. I think there's still room for an incremental high, maybe above 98.17, if it can stay above this 96.30 level, which could potentially be a breakdown point and allow the price to slide down from there. So we'll just have to watch and see. USD JPY. Moving along more or less as expected. We got a three-wave move to the downside, ABC, a three-wave move up, ABC. Now I'm expecting some kind of a C wave to the downside. I think it could stretch all the way down here to 122, potentially. But I would say for now, key resistance for further downside movement is at the high of 124.35. The QG3 is still in a bullish alignment. The 20 DMA is trying to maintain support here. Is doing an okay job so far. The weekly closes as a long-legged doji, which means if next week we come down here and close below this intra-week low at 123, close below that, that's going to be bearish, could allow for some follow through to the downside. And of course the opposite is true. the intra-week high here, so as was at 124.58. You get next week to close above that level. That's more than likely going to spur a some follow through to the upside. All right. The EWO, nothing to show you there. Daily RSI, we're still in this range-bound place between 60 and 40. Very neutral spot right there. Market's really not committing to anything one way or the other. The MACD is closed out. It's neutral on the daily and on the weekly. We're still slightly open to the downside on the weekly. So overall picture for USD, JPY, I'd say is characterize it as neutral. Doesn't seem to be going any place really fast. All right, taking a look at the euro. Today, we've had this produce a inverted hammer candle with today's radical shot up and then push right back down. All I can tell you is that it looks like, much like the dollar, we may have set a key resistance and possible breakout point to the upside at today's high at 1.1114. So if we see a break above that next week, we might see some follow through to the upside. But while we're below these levels, I'd say there's still potential for further downside. The QG3 here has closed out and pretty much contracted to a neutral, very neutral stance where all three lines are just parked right next to each other. Even got the price parked right there as well. You can't get more neutral with the QG3 than that right now. And the euro on the weekly, really nothing to show you there. It's for neutral pattern. Other than the long-legged doji, if we close above that next week, bullish, close below it, could allow for some fall through to the downside. The EWO, nothing to show you there. RSI, again, nothing to show you there. We're just parked right here in the middle between 40 and 60 right now, very neutral. And MACD is open to the upside just slightly on the daily, and weekly we're open just slightly on the weekly too, slightly bullish. So euro still very in a deep neutral spot right here, and really not giving us much of an indication one way or the other. No, I don't want to go there. I will go to cancel. We'll go to the Great British Pound. Let me show you some stuff there. All right, there's the hour chart. I wanted to show you this pattern. We've got this buildup right here, a sideways choppy buildup, and that does look potentially like a cup. We got some, initial moves to the upside, and now we're building this kind of a rounded cup, kind of a half moon, if you will, to the downside here. And this oftentimes is a signal, a development of energy, a buildup of energy over a period of time, and I think we could be on the final phases of it as we build up kind of a handle here over the next few sessions maybe. And I would say a solid break above maybe 56.80 could be a good indication that this energy is going to let loose to the upside. Of course, it has to stay above key support at the low at 54.73. So got to be above that level to keep the upside potential, keep it going. If we break that level, then that's going to cause all this energy to flood to the downside. And the QG3 here is in a bullish alignment to the upside, and you can see that the intraday low, did come down here to test the 20 DMA and did find some support. So that's bullish. On the weekly, really, the weekly candle is not very helpful. It's neutral. And the EWO is right there at the 0 line, is neutral. And RSI is neutral, right there between 40 and 60. So not much to show you there. The MACD on the weekly, however, is still in a bullish alignment to the upside. And on the daily, we've just got a slight bullish alignment to the upside as well. So I'd say, the Great British Pound here is looking like it's developing something bullish here that could let loose to the upside fairly soon, especially if we keep above the 20 DMA going forward. Let's see. Let's take a look at the Dow since we're here. All right, so the Dow comes up, and then we're just kind of chopping sideways here. If we zoom in on this chart over here, you might give you an indication of why. This red line here is the 200 DMA, and you see that we broke below it, popped right back up, crashed right through it again, and now we're getting a back test. So something that the 20 DMA, 200 DMA that has provided support a number of different times. Once here, another time here, another time here. This broke through, but reversed quickly and came right back through. And now 200 DMA really didn't provide much in the way of support here, even though we did get a bounce up. Crashed through, and now look what's happening now. It looks like that 200 DMA is acting like resistance. 200 is not turned over yet, but further downside movement could bring that 200 DMA, cause it to crest and maybe bend over eventually, maybe later this year. Plus, we got the this orange line is the 50 DMA, which is starting to curl over and head towards the 200, which could produce a death cross coming up here in the weeks ahead if we maintain some daily closes below the 50 in particular. The week, very neutral, nothing really to see there. And the EWO, it's very neutral, nothing to see there. RSI, still very neutral right here in this, between this 40 and 60 area. And weekly, we got a open to the downside in the weekly MACD so far. On the daily, open to the downside as well still. And this is kind of how the stock market tops work themselves out. They do these, they oftentimes can do these very long, drawn out tops that take a very long time to eventually fold over and break to the downside in any convincing fashion. So still kind of a wait and see game, still very iffy, but I'm still favoring the downside in this market. Let's take a look at crude. All right, crude oil not performing as expected. Back out to the 2-hour. So it did look like we may have been starting an impulsive move to the upside after 5 waves down, but today's move to the downside clearly breaks key support there at 47.39. So can no longer consider the impulsive move to the upside here. This is clearly just a 3-wave correction of some sort. But looking at the larger picture, I don't know what to tell you. This was a nice, clean 5-wave move to the downside here. I would have expected a larger bounce here from that, but clearly not happening. I really don't know what to tell you here, other than it looks like key resistance is going to be right up here for now at the high of 47.77, and while we're below that level, or not 47, excuse me. I don't know why it measured that. The high was at 49.52. While we're below that 49.52, it does look like we're going to continue to be in a bearish trend to the downside. But where it stops, I'm not really sure. I do think there is a potential for it to come back down to, say, for the 42 level. That wouldn't be too surprising. And coming down here to the 42 level could put in a potential double bottom. But again, nothing to bet the farm on at this point. And the weekly closes down into the bottom 10% of the weekly range, so that's bearish. And I would expect some more follow through to the downside next week. Daily, EWO, again, not much to show you there. RSI, we could, if we get an incremental low next week, could start to see a positive divergence build up in the RSI potentially. We are down here in oversold levels underneath the 30 level, so that's a good place to be looking for some bottoms. The MACD on the weekly does turn over bearish to the downside on the weekly, and the daily is still slightly in a bearish limit to the downside on the daily. All right, so let's move on to the Elliott wave charts here. Here's the dollar. So I was expecting a fifth wave move to the upside here, and I'd have to say it's still possible that we could get an incremental high, maybe above wave 3, top of wave 3, which was at 98.15. But the price is gonna have to stay above this 96.28 level. Break below that, and I'm gonna suggest that that's a breakdown point, and we could slide down here to test the purple trend line at least again for a third time. And the euro, more or less in the same boat. I've backed this out to show you over the course of several months here back into 2014. This downtrend has a key trend line here on the log scale that has been tested 1, 2, 3 times. Now a fourth test that could potentially come up sometime soon could allow for a rule of 4 breakout to the upside, which coming up here to say 24.80, 124. 80 is a potential recovery point. But while we're below the blue trend line and below this week's high, I'd have to say that some more downside is possible in the short term, at least. USD JPY. All right, so here's a new count that I've come up with. It suggests that this is a wave 3. We got an ABC for a 4. We got a leading diagonal for a wave sub-wave 1, sub-2 as a triangle. Now, wave 2s generally are not triangles. You shouldn't consider wave 2s or a triangle as a wave 2 when you're doing your counting. It's just not something that is generally practiced. And the only reason that I am even remotely considering this wave 2 as a flat triangle count is because of the larger picture, which does, I think, support the idea of a choppy wave 5 advance, or kind of an ending diagonal for a wave 5 of 5 here. And we do have the alternation between a flat and a sharp for between 2 and 4, so that makes sense. So if this count is correct, the price is going to have to stay above 120.40, but we could still be in wave 2 here with an A, B, and potential C. It could come down here to the 61.8% Fibo, right around 121.90, 122, something like that. and then allow for another bounce to the upside. Great British Pound. Here's a long-term count. This 9-way move to the downside played out really nicely with a triangle thrust to the downside and recovery. We made a nice chunk of change off of that move previously, earlier this year, and now this movement over the last several weeks looks like it could be a contracting triangle with an A, B, C, D, and E potentially complete. We've got this buildup of energy like I showed you before on the other charts. And so, and we're breaking this orange trend line. So all is looking fairly good for wave B maybe being complete. And maybe we're coming up here into a wave C to finally hit that 61.8% Fibo right there at the 1.6187 level on the Great British Pound, which is an interesting coincidence that it matches up with the 61.8% Fibo of this retrace of this impulse to the downside. So I'm going to be looking for a potential entry point here for the long side. I think it's worth a shot for coming up here at 56 level, maybe coming up here to 61.8. You're looking at 500-600 points there to the upside. It's certainly worthwhile. And of course, it's going to have to stay above wave E here. What I have labeled as wave E, and that low is at 54.65. All right, looking at the Dow using YM, which is the mini-sized Dow mini contracts. We're looking at a series of 1s and 2s here. I think that potential is still open. I think we got wave A that's probably nearing completion here. May see a wave B down and then maybe another pop back up into wave C of 2. Complete a 3-wave move for wave subwave 2, and then maybe the wheels come off this market and we start sailing to the downside. 61.8% Fibo is a key level of resistance there at about 17,786. NASDAQ. Now here's the NASDAQ count that I was relying upon, and right now we've popped above the blue trend line, which connects the origination of wave 1 down and the end of wave 2. So this is kind of a base trend line for the downtrend, for an impulsive downtrend. And since we've broken above it, the wave 2 is not off the table. The subwave 2 is not off the table, but it is in jeopardy. There is a greater increasing probability that we could break key resistance there at 46.46. So we may be backing out of this position to some degree while it's in this jeopardy area. If we get some kind of convincing reversal next week, maybe we'll add back in, of course, but for now, I think we need to respect that trend line break and ease out of our short position here. Crude, again, I don't know what's up with it. We had this nice clean move again, right into 78.6% Fibo support, which is just below there. And we're just not getting the impulsive reversal that I was expecting. So it's best to be stopped out and on the side, I think, for now. And we'll just have to wait and see what this market's going to do. Really, from an Elliott wave standpoint, I don't know what to make of this. No Elliott wave is really popping out at me as a good clean count with any elevated chance of potential here. So I think it's best to just leave it alone. All right. So that's it for our coverage of the peripheral markets for this week. Hope you all have a great weekend. And we'll be talking to you later. Adios.